Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at The Contrarian Trader, where we trade the charts and not the hype. Let's go over what we're going to touch upon today. First off, market sentiment. Where do we think that the markets are heading now? December is now open. November is in the books. Where to from here? What is our opinion on the markets? Then we're going to segue into our performance last week. How did we do? We'll talk about those trades. We took 2 trades off the table. And then we're going to talk about trades that we like on the charts for the coming week. So let's get to it. Let's begin with an overview of the markets. We'll talk about the S&P 500, and our sentiment right now is neutral. We are now neutral on the market. We were bearish. And you may be looking at this chart of the S&P 500 and saying, you know what, Bob, it broke out on Friday above the upper band of resistance. Yes, it did. This is a daily chart, right? It's very noisy, a lot of stuff happening here. What you want to focus on are the weekly and monthly charts. How much technical damage has been done? Are we due for a short covering rally here, or a continuation short covering rally into the new year? And should we be looking to short the market late December and into January? I'll be discussing that with members tomorrow on the week ahead strategy session. But for right now anyway, what we're looking at is, yes, we definitely have a breakout on RSI, which is a forward-looking indicator, a breakout on price. Volume was very, very good yesterday, meaning Friday. The problem here, folks, is that we closed below the 200-day moving average, which is a natural resistance level. We also had the 50-day moving average, which is a declining ceiling, and will in all probability cross down below the 200-day moving average, which is a technically bearish event for the S&P 500. So what do? Do you go selling stocks, shorting the market? No, not right now. You don't short the market right now. Seasonally, this is a traditionally bullish time of year. It is also a very thin volume time of year. And what is the reason for there being a bullish sentiment to the market this time of year? You have fund flows. You have money that is moving into IRA accounts, 401k accounts. At the end of the year, that money needs to find a home, and it finds its way into the stock market, especially after the sell-off we've recently had. Why does volume dry up a bit even though you have fund flows? Well, you have institutions that close their books on the year, and they go on vacation, literally, and they put the computers in charge. Now, you're not going to see volume drop off until the 3rd week of December. So right now, our bias is going to be to the long side with an eye to the short side as we move into 2019. Let's segue now into our performance and how we did last week. Hey, folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to The Contrarian Trader. That's right. Trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. We'll kick things off with our recent trade of Netflix. Now, Netflix was a best stock chart last week, and we opened up our position here on the 28th of November as we began to break out and above this upper band of resistance. We anticipated a short covering rally. We got that short covering rally. We bought in on Netflix at 276.95. We booked profits here on the 30th at 284.50 per share. That was roughly a 3% gain on this trade. So let's talk about why we bought Netflix. Well, Netflix was consolidating nicely. It flashed a bullish key reversal bar on the 27th, which would imply that you're probably going to get a move higher. Then, as we appeared poised to close above this upper band of resistance on the 28th, and most importantly, we appeared poised to close above it, I decided, okay, let's get long of Netflix. We had a price target up and into the 20-period moving average, which it hit on not only the 30th, but also on the 29th, and really made no headway. So I said, you know what? First out, best out. Let's book profits here, and let's allow for a pullback, and then we could look to reopen our long trade of Netflix as the 20-period moving average begins to flatten out. So Netflix will remain on our watch list as a potential long as we proceed into the new trading week. Now, why do we still remain bullish on Netflix? It's very simple. When you take a look at the weekly chart, remember, you can't get too hung up on the intraday charts or the daily charts. You really need to focus on the higher level view of the battlefield. And trading the market is a battle. It's a war. It's a zero-sum game, right? You have winners, you have losers. So if you spend too much time on a daily chart, which is far more noisier than a weekly chart, you miss some really great signals by the market that can make you a lot of money. And this is what I like to teach members. Now, last week, for a case in point, we managed to recapture a prior support level at the 271.21 level. We did not put in a new weekly low last week, and in fact, we have a bullish engulfing of the prior week's move. This is a very bullish setup on a weekly basis. It implies that in the coming weeks, not necessarily next week, but it's possible, but in the coming weeks, we're probably going to get higher highs. That's a good sign. Now, what could happen here is that we pull back and retest that 271 level. What we'll be looking for is as to whether that support level holds, and then we'll look to reopen our trade to the long side with a stop right below, because we have, at that price point, very little risk because we know exactly where we want to stop out, and a lot of upside potential. So it makes sense. So members, more to come on Netflix on the week ahead commentary. That goes out to members on Sundays. Now, volume last week on Netflix was really good. It was well above average. So again, to repeat, Netflix remains on our watch list as we proceed into the new trading week. The next chart up, DLNG. This was an extreme oversold trade. This is our bread and butter, these types of trades. We booked a profit on this one of 14%. Now, I discussed this with members last week on the week ahead commentary, and here are my thoughts back then on Sunday of last week. DLNG, weekly chart. We've overshot to the downside now, and we closed down below key support at $5.16. I think we're coming down here to $4.68 before all is said and done. Daily chart. On a daily basis, we have RSI 14.28. This is a stock that's trading at $5 per share. We can easily see RSI sub 10. So please don't get lured in by an RSI in the teens. They can go single digit, especially on stocks below $5, and that's where I think we're going. Volume is still very high. So now is not the time to go catching a falling knife here. Okay, so fast forward, we were up here, and I said that I expected the share price to continue to decline. What we were looking at here was RSI at that point in time was at 14. We went as far down as roughly 10 intra-week. Now, we did 2 rounds of buying. The first one was what I like to call a scratch the itch round of buying. And that's because we had broken down below a key support level, and I had anticipated a rally back, possibly to close back above this support level, much as what we did back here the week of January the 19th, 2016, when we overshot to the downside and then we flashed a bullish reversal bar. I didn't necessarily expect a bullish reversal bar, but I did expect us to rally back and close back above support. It didn't happen. That I'll talk about a little bit further as to the reason why we closed out the position, but more about why we opened the position and how we decided to add to the position. So as I always like to do with these trades, extreme oversold trades, is identify where we have historical support. So obviously, we broke down last Monday below that lower band of support. Back to the daily chart. We opened up our trade here on the 26th. And as I mentioned before, I call it the scratch the itch trade. What does that mean? It means that we have a good situation on our hands, meaning we had RSI below 14 at that point in time. So very oversold on a daily basis. But as I coached members, don't go aggressively buying DLNG just because we open up a small position right now. You need to expect that the shares will continue lower and that you should view any pullback from existing levels as an opportunity to continue to build a position. And then when the market sends us signals vis-a-vis bullish key reversal on a daily chart or on an intraday chart, breakouts on a 30-minute, hourly, or 2-hour chart, that will be a signal that it's okay to begin adding a bit more aggressively in anticipation of a rally. So on the 28th, we added more and far more aggressively, 5 times as aggressive on our buying as RSI was roughly at 10. Now, what prompted me to go adding more to this position, considering the fact that we closed very close to the lows of the day? 30-minute chart. All right, so on this 30-minute chart, we were watching RSI begin to put in higher lows, and it was confirming what we were seeing on the price. We were breaking out. Let's zoom in here. Here you have it. We broke out above this upper band of resistance. And as we began to break out and gain strength on the 28th, I said, okay, now is the time. The market is sending us a signal. And then the rest is history. Now, why did we exit the trade? Let's go back to the daily chart. All right, so on a daily basis, we rallied, obviously, on the 28th, and 475 was resistance. Then on Friday, we failed to take out that resistance level or even retest it. We came close, but no cigar. Now, I'm of the school that is a firm believer, weekly chart, that weak stocks tend to get weaker. You do get extreme oversold, opportunities to get long, but history has taught me, especially when you do not have a huge short interest in a name, that you had better not swing for the fences, accept doubles, singles, and move to the sidelines, because you could get burned on that trade and you'll see your profit slip away. So we had a 3% profit with only a couple of trading days. That's a good return. So as I always like to say, back to the daily chart, first out, best out. Move to the sidelines. Let's watch for a continuation pullback on a breakout. We could look to re-enter if we so choose. So congratulations to members who joined in on this trade and on the Netflix trade. I get a lot of thanks. Don't thank me. You made the decision to enter. You made the decision to book profits. You made them real. You didn't get greedy. Good for you. Congratulations. Let's move on and talk about stocks that we're watching for the coming trading week. The first chart up is GV Goldfield Corp. We have RSI sitting at 13.68. And as I just mentioned on my review of DLNG, stocks that trade below $5 can easily see RSI below 10. I've seen it many, many times before. So just because we have a 13 handle on RSI does not mean that you go jumping in on Monday morning and buying these shares hand over fist. Nothing could be further from the truth. To drive my point home even further, I would caution that I believe that these shares are going lower. Why do I think that? Well, the markets send us signals, right? We attempted to find a bottom here on the 28th. They couldn't close it positive. They did rally it the next day, but they sold it off the highs of the day, right at $2.50 per share. The next day, they tried to rally it yet again. That rally failed. So what do we have above here? What is the market telling us? We have sellers at $2.50. And then we flashed a bearish key reversal, a very bearish candlestick. This implies that in all probability, we are going to go lower. Volume is still well above average, so you still have institutional distribution. Plus you have shorts that are leaning into the shares at these levels. These guys are nuts, but these are late stage shorts, amateur shorts, and they are the first to get squeezed out of their positions. Thank you very much for your existence. Now, we still have stochastics, which are rolling over. So members, what we're going to do tomorrow is we're going to pull back. We're going to take a look at the weekly and perhaps even monthly charts of GV to identify if we have historical support below, and if we do, where do we want to consider entering our position? And if there is no historical support below, then we'll use the intraday charts to identify intraday divergences, which would imply that we're seeing some stealth accumulation of the shares, much as what I just pointed out on DLNG on the 30-minute chart. We closed down on the day on DLNG, yet on a 30-minute chart, we were breaking out. So the market was sending us signals. We'll look for the same on GV. But right now, this chart is weak and in all probability will go lower. So warning flag on the track, but I am very, very bullish on GV for a short-term swing trade. NBEV, I went over this one last week as a member stock chart request. I didn't find this stock. This is one of our members. I have very, very smart members, and many times they bring trades to the table that are very interesting. Now, last week when I discussed this, I'll link to the video at the end of this video if you want to go back and check out the commentary from last week. We were trading within a triangle formation. I said, don't go buying these shares until such time as we retest support and or breakout. We got both last week. We retested support, then we flashed a bullish reversal bar, breaking out above the upper band of resistance on a weekly basis. This is a very bullish continuation breakout setup. Now, does that mean we go shooting off to all-time highs next week? No, not necessarily. We could pull back and retest this breakout point. Could we proceed higher next week? Sure, absolutely. So we'll talk strategy about NBEV tomorrow on the week ahead commentary with members. The next chart up, Shopify, SHOP. This is one I haven't spoken about in quite some time. I'm a big fan of the company. And you can see on a weekly basis, we have a breakout on both RSI and stochastics. So what we can divine from these breakouts is that we have momentum indicators, forward-looking indicators leading price performance. I think that there's a very good chance that we break out on Shopify in the coming week and or weeks. Now, last week we had a very bullish week. We made a new weekly high. We're up over 13% on the week, but we closed at resistance, so we couldn't go buying. What we need to see here is a continuation move higher on Shopify. I think it's completely possible and probable. So members, we'll talk about a strategy of as to how we want to begin bull operations on Shopify tomorrow on the week ahead commentary. The next chart up, I can't believe I'm going over utility, but I'm going to go over utility. Duke Energy. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below. Duke Energy. The utility sector has been outperforming the market of late. Go figure. I have my reasons as to why that's occurring, but that's for another video. That's more of a macroeconomic conversation. So Duke Energy, this is a monthly chart. And again, this goes back to our strategy as contrarians. We want to identify breakouts for longer-term swing trades and investments. Not necessarily day trades, using the higher level view charts, the weekly charts, the monthly charts. And you can see that on a monthly basis, Duke Energy broke out in the month of November, and we closed very close to the highs of the month. This is very bullish stuff. We have a breakout above resistance on RSI. Stokes are rising. They are above 50. Very attractive. Volume was good. It was slightly above average. The prior month was very good as well. So we have institutional accumulation of not just Duke Energy, but of the utility sector. Simply take a look at the XLU. A very bullish month last month. And look at this volume. This is not mom and pop buying 100 shares of the XLU. This is Fidelity, Goldman Sachs, JP Morgan Chase. Hedge funds. And what are they chasing? Yield. If they are chasing yields, they are betting that interest rates here in the United States are going lower. I digress again for another video. I can go on about this stuff all day long. Members, you'll have to deal with my commentary tomorrow. We'll talk about the macroeconomics on Market Pulse Check tomorrow, and then we'll segue into a more detailed deep dive of focus stocks, which we're reviewing right now, and our positions, of course. The next chart up, FORM, FormFactor. Let's throw some lines up here. If you're not one to take your crayon out, your annotating tool, and draw resistance levels and support levels, you really need to do it. It's so important because once you get into the habit of doing this, it helps you to identify where you want to add to a position, where you want to stop out of a position. And it also helps when you go back to a chart a few months later, it helps remind you of what you liked or disliked about that chart at that point in time in the past. So you can see we had a very bullish candlestick on this chart last week. We broke out clearly above resistance and we closed above a prior high last seen back in August. So what we have here is a stock that has been putting in higher lows and is now beginning to put in higher highs. So this correction, for all intents and purposes, is over. We are now resuming the longer-term uptrend. Volume, outstanding last month, simply outstanding. This is what you want to see. These are institutions. This is the rocket fuel that you need to have a stock press higher for the coming weeks and months. You need institutional demand. RSI consolidated nicely at the 50 level. Very strong price action here. And in fact, we broke out last month on RSI as well. Good stuff here. So we have validation of the price action on RSI as well. Exactly what you want to see. So members, more to come on a daily chart, intraday chart, on FormFactor, perhaps even a weekly chart to identify where our best risk-to-reward entry point is and where we would want to stop out were we to be wrong. The next chart up, FireEye. Now, this sector is a mixed bag. I mean, Palo Alto Networks is just getting crushed, but FireEye is holding its own. I spoke about FireEye back here as it began to break out of this bull flag setup, and it's held up fairly well during this sell-off. I mean, it did have a rough week, the week of November the 19th, but we bounced off the lows of the week and we had a continuation move higher last week, but no breakout above resistance. So that's what we need to see. Now, I think it's going to happen. I think we will break out on FireEye. Why do I say that? Well, you have your stochastics, higher lows and probable double bottom setup here. I'm looking for a breakout. RSI, higher lows and higher highs. No breakout last week, but very, very close. Volume, outstanding last week. Again, institutional demand, exactly what you want to see. We have a cup with handle formation and a higher low, an ultimate oscillator. FireEye looking very, very good. Members, more tomorrow regarding strategy. We're going to leave off with Tiffany. This is a very concerning chart, longer term. Tiffany for the month of November was down over 18% on the month. And I think that in all probability, we are going lower because we closed very close to the lows of the month. Now, I could see support at, let's call it 85.48 holding. We'll probably get an overshoot to the downside. But this is a story, folks. This is a retailer with a very high-end clientele that is getting its teeth kicked in. You need to ask yourself the question, why? What's going on with the rich? Daily chart. So the reason why I'm talking about Tiffany right now is not to short it. I think that, yes, it's going to go lower. But I think what we could see here set up is a capitulation sell-off. I'm looking for RSI to probe, if not go below, the 20 level. And then we'll look to add Tiffany to our watch list as an extreme oversold trade. And we'll look to buy it for a short covering rally Longer term, though, I think that there are a lot of problems here at Tiffany, and in the coming weeks and months, it will probably move lower. But I'm seeing an opportunity set up here, given the real serious distress selling for these shares to become extremely oversold. That sets us up for an opportunity to buy when there's blood in the streets and take advantage of a counter trend rally. But we will not stay long. We will book our profits and we will move to the sidelines very rapidly. Now, what I love about this story, back to the monthly chart, is that we have a lot of prior support levels and resistance levels below. And they will act as our guide to help us identify where our best risk to reward entry point is for Tiffany. And if that support level fails to hold, where we must stop out. Because in all probability, we'll proceed down to the next support level. That's just the way it works. Hey folks, if you got any value out of this video, please subscribe to my channel on YouTube. Leave a comment below. Give me a like if you could. Share with a friend. If you have any questions, leave it in the comments section, and I'll definitely get back to you. Everybody have a great weekend and a very, very profitable trading week. Be well.